Bismillah Rahman Rahim, Hussain Qazi here. A very warm welcome to my SBR session. Agenda of this session, number one, this is a debriefing session. Topic, group accounts. Question name, Articat company. Before starting the session, I wanted to share one very important point here. I am assuming that you people have already attempted this question with exam condition. If you haven't done that, stop this video and first have to attempt that question with exam condition, then continue to watch this. Otherwise, you will not be able to get any advantage. Okay, so let's start the debriefing session. Students, whenever you are starting any of your exam question, the first thing in front of you, it's about the background information. Background. So what is the purpose to read the background? The purpose of to read this background, it's about to develop the basic mindset. Develop the basic mindset. For question number 1 with SBR, that's about the group accounts. So develop the mindset, some basic points. Number 1, the name of the company. Number 2, the reporting date. That's important, reporting date. Number 3, you know very well the scope of the exam, either as a balance sheet, consolidated balance sheet, as consolidated P&L or consolidated cash flow. So here very particularly mentioned it's P&L. So now your mind become focused. This is the question of P&L. Of course, if this is about the P&L, you need to sort out the thing. The very common, very oftenly examiner examine the things. The change in group structure, that's something, step acquisition or the disposal. So you need to find out what includes the question. Here's something mentioned, sold shares. That's the case of disposal. And there are two subsidiaries, Thirdle company and Findler company. Okay. Then further, about the Thirdle company, something about disposal of shares, P&L and disposal of shares, and also something about sale of inventory. Okay, good. Further, Findler company, again disposal of shares, something about transfer of property. Further, draft P&L is available. That's a pre-populated spreadsheet working available. So this is what about the basic information. Immediate after the basic information, don't enter with the text. Instead, you need to read the requirement. So using exhibit 1, explain and calculate. Reading is an art. Reading and understanding is a very key point. 20% time you need to invest for planning. Planning includes reading, understanding and brainstorming. So explain and calculate the accounting treatment, consolidated financial statement about the disposal of shares in Thirdle company. Okay. Exhibit 2, explain but without calculation. Explain without workings the accounting treatment in the consolidated financial statement of the Articat group of the following issues: reversal of impairment, disposal of shares in Findler, sale of property by Articat company. 11 marks. B part, using pre-populated spreadsheet, response option, and using the pre-populated and use the information of exhibit 1 and 2, all above informations. Revise the draft consolidated P&L for the year end 30th June X5. This is the requirement. Okay, now it's time to enter the reading of the main context. But wait, before entering the reading of the main context, there are two possible approaches to attempt the group accounts question. Approach number 1, read the question, then attempt part A, then part B. This is the first approach. But the second approach name is simultaneous approach. Second approach is simultaneous approach. What is the meaning of simultaneous approach? Quickly overview the pre-populated sheet. And you know that pre-populated sheet, you need to make some adjustment. The adjustments, the scope of adjustments, either correction of error or either some missing figure, and you need to incorporate that adjustment. So either error, either missing figures. So simultaneous approach means quickly overview the pre-populated response sheet, and once you read the question, identify the mistakes and incorporate the mistakes with the pre-populated sheet. Same, attempt the A part and simultaneously adjust the pre-populated sheet. So approach 1, once again, approach 1 is about read the complete question, then part A, then part B. This is approach 1. Approach 2, simultaneous approach. Quickly overview the pre-populated sheet, and once you read the question, identify the missing or correction of errors, missing figure or correction of error, and even attempting the part A, identify the figures for the adjustment, and with both scenarios, either reading or part A, complete your pre-populated sheet simultaneous approach. Sir, what we should do? I strongly suggest to attempt the question with approach 2, that is simultaneous approach. Have to attempt the group accounts question with simultaneous approach, because with this approach you can save your time. Do remember, time management is a key factor. You can save your time with the section A. For example, with group accounts, for 30 marks question, you have approximately 54 minutes. 80 is equal to 30 into 1.8, 54 minutes. If you save 7 or 8 minutes from this question, you can invest with the section B, because you will face more challenge with the section B. So this is called a smart technique. So whatever I have advised here and whatever I will perform with the questions, or I will advise here, you have to perform with the rest of the questions of the group accounts. Simultaneous approach, and save your time. Before the exam, you must be able to complete your group accounts question ideally by 45 minutes. And may Allah, God willing, you will be able to do that, inshallah. So, before entering the reading of question, make a quick overview. Oh, this is the consolidated P&L accounts. Consolidated accounts. Consolidated. This is the consolidated accounts. Okay, revenue, cost of sales, GP, distribution cost, admin expense, profit, investment income, finance cost, profit before tax, income tax, profit for the year. No NCI, and we don't want to work out with the NCI with this question, because examiner particularly mentioned that. So now start reading. Come on. Okay, start reading. And you have, I know that you people have already attempted this question, so you have read this question very precisely, very comprehensively. Okay. Exhibit 1. Start with Exhibit 1. 1st October X4. Reporting date 30th June X4. 1st October X4. 9 months before the year end. Articat sold 50,000 shares in equity shares in third company to proceed for 465,000. Sold 50,000 shares. Consideration received 465,000. Next point, sold 50,000. So what was the total proportion previously we have? Okay, that's available with the second para. But complete this line. Articat company debited cash and credited investment in proceed. So they have done it, huh? Cash debit, investment credit. It's right or wrong, we will consider later. Articat company had acquired 400,000 of the 500,000 shares, $1 equity of several years ago. So several years ago, 400 over 500, that's previously they acquired 80% shares. So out of 400, they have sold 50,000. So still remaining 350,000. So that means the proportion shift from 80% to 70%. Aha, this is a disposal, but no control loss, no control loss. Student, one important thing. If this is the case of income statement, so you need to develop your mindset as well. What adjustment we need to incorporate with the income statement and what's not the part of the income statement. Because if something about income statement and if it's not about income statement but affect directly to the balance sheet, or for example, if this is not the question about the other comprehensive income, it's only about income statement. So we have to only focus with the income statement adjustment. Avoid all other adjustments. That's a key point. So prepare your mind. This is the question of income statement. That's important thing. Okay. Okay. So the point is that your mindset says 1st October X4 disposal, about disposal case, no control loss, 9 months before the reporting, it's about 80 to 70, still. So that means at reporting date 30th June X5, it's still subsidy, still consolidate at reporting date. Income statement, yes, 100% need to consolidate. That's a point. Now next point. Come on. Okay, goodwill on acquisition was correctly calculated as 68,000. If examiner mentions something correctly calculated, you don't need to disturb anything, and has not been impaired. Okay, the fair value of net asset of third company excluding goodwill 1st October X4, that means at disposal 4.8 million. That's also good. That disposal date, this is disposal date. This is a disposal date. Thirtieth June X5. What is that date? 30th June X5. That's a reporting date. 30th June X5. Third 30th June X5. Third is still in subsidy, still subsidy. Third sold inventory markup of 25% to Articat company for 30,000. Articat company still had all these goods in closing inventory. All 100% still exists. Sale and purchase were both recorded correctly in the individual financial statement, but no adjustment have yet made consolidated statement of financial position. So that means this is something, an error. This is an error. So if there is no adjustment that have yet been made in the consolidated statement of financial position, so why not to incorporate this adjustment with the pre-populated sheet? All the information available here. So let's make adjustment. Now come on. First adjustment here, that is about intra-group sale. You just mentioned intra-group sales, revenue debited, and cost of sales credited. So minus the revenue and minus the cost of sales. But sir, here you mention the plus because cost of sales already the figure having the minus. So minus plus minus. It's very simple. So first thing is intra-group sales. Sir, this is intra-group sales, but we need to incorporate a working as well for unrealized profit. Yes, exactly. About the unrealized profit. Still 100% inventory exists and inventory sold from subsidiary to parent, irrespectively either the downstream or upstream, that's subsidiary to parent or parent to subsidiary, irrespectively. What's the unrealized profit? The unrealized profit 30,000 divided by 125 because here the term mentioned markup. So 30,000 divided by 100 plus 25 multiplied by 25, that's equals to 6,000. What should be the entry? Oh, sorry, what should be the transaction? That is unrealized profit. Need to make adjustment with the working one. Reference URP unrealized profit working one minus 6,000. That is about inventory should be credited. If inventory credited, that means cost of sales will be debited. So inventory should be credited. That means impact on cost of sales will increase. If inventory decreases, cost of sales will increase. If the cost of sales increases, that means minus 15,704,000 minus 6,000 minus plus. That's simple. Student, this is called simultaneous approach. Simultaneous approach. This is called simultaneous approach. That's during the reading and during the attempt of part A, you need to incorporate the adjustment in the pre-populated sheet. You will save the time accordingly. Okay, sir, move on. Articat company valued NCI at acquisition at proportionate share of the fair value of the identifiable asset. Okay. So here Thirdle NCI at proportionate method. Articat also has included 100% of the revenue and expense of Thirdle for the year end 30th June X5 in draft P&L. So this information is mentioned that 100% of revenue and expense incorporated. Is this right or wrong? Thirdle disposal case is about that no control lost. That means it's still subsidy. So all the revenues, all the income and expense must be consolidated. Okay, the adjustment that's required of the profitability with respect to NCI, but this is not the case here. So this adjustment is absolutely right. No adjustment required here. And examiner also mentioned that NCI proportionate method, but here we don't need to calculate anything of about the NCI. So that is about exhibit 1. That's good. Further, exhibit 2. 1st July X2, Articat had acquired 900,000, 1 million ordinary share of Fender. Our date of the reporting is 30 June X5. It's a number of years ago. Articat purchased 90% of the shares. The carrying amount of the identifiable asset equal to their fair value 7950. Okay, this is about the fair value. And valued the NCI at fair value. Now, the company policy about the Findler, it's about NCI at fair value. Sir, is it possible that two subsidiaries, with the two subsidiaries parent report the NCI with two different formats. One is proportionate, another fair value. Yes, it's allowed. It's absolutely allowed. There's two different subsidies. You can use different methods of the NCR. So it's allowed. And this was deemed 870,000. That's good. 31st March X5, Articat company sold 500,000. 500,000. Out of 900, 500,000 disposed of equity share of Fender for cash of 10 per share. Hold on. Develop the mindset very precisely. Fendler case, very categorically. 31st March X5, that means 3 months before the reporting date. 90%, that 90,000 shares, 900,000 shares, sold 500,000 shares. That means it's become, till now we can say that the remaining shares has become 40%. So it's become associate if the condition is that if significant influence exists. So if this is an associate at the reporting date, what we will say, first 9 months consolidation, last 3 months equity account. Last 3 months for equity account. Equity account. That will be the structure. Now come on. 31st March X5, Articat sold 500,000 equity shares in Fender for cash $10 per share. $10 per share. 500,000 into $10 consideration. This was the fair value of one Fender company share. Okay. Articat company has included entire proceed within investment income in the consolidated P&L. That's something wrong. This is the case of disposal with control lost. We need to calculate the profit gain or loss on disposal of shares with acquisition method and not to incorporate the things with the investment income. That should be a separate line item, either gain or loss from disposal of subsidiary shares. Yes. So this is the mistake. Fair value of the net asset of Fender company 31st March X5 9048,000. Fair value at disposal date. Draft statement of consolidated PN only includes 9 months of Fender company profit for the year. This is absolutely right. They have done very clearly. They have done the true reflection of the P&L. That's 9 months consolidation. Profit for the year 504,000 and accrued evenly. You can proportionate this profit evenly. Okay. Another one. Plant owned by Fender by subsidiary on 31st March X5 had a fair value 20,000 above the carrying amount and the remaining useful life 2 years. Do you remember? At 31st March X5, the subsidy has become disposed, control lost, and it can be assumed that Articat company's significance influence following the disposal. And now we can say that it's become associate. And it's become associate means subsidy to associate. And we will assume that all the subsidy shares has become disposed, and that means overall 900,000 disposed, and assuming that 400,000 investment acquired as associate. And with associate accounting, we also need to make a fair value adjustment if required. And here something about the fair value adjustment as well. So two things here. Something about fair value adjustment, but before that, very precisely, the disposal with control loss not yet accounted for. So what we should do now? What we should do now? Quickly work out for the disposal gain and loss and adjust the P&L. That's important. But read this complete statement. Goodwill of Findler Company 1020,000 had been impaired by 25,000 in the year end 30th June X5. 30th June X5. What is that date? 30th June X5. Previous year reporting. Since the sale proceeds were above the original cost, it was decided reverse the impairment in the current year and credit to admin expense in the draft P&L for the Articat group. What they have done? Once again, goodwill 1020,000. Previous year disposed 25%. Sale proceed above original cost, and it was decided to reverse the impairment current year. They are justifying that reversal of impairment of goodwill because we have sold the inventory more than original cost. IS 38 categorically disallowed. If goodwill become impaired, it's not possible to reverse the impairment of goodwill specifically, because reversal of impairment count as internally generated goodwill, and there is no place of internally generated goodwill with accounting. So it's not possible. So this is also an error. Two things important: goodwill value. Number two, current year reversal of impairment having wrong adjustment. We need to withdraw this. Further, last 30th June X5, year end, Articat sold property to Findler. Now Articat to Findler means Articat to associate, because at year end it's now become associate for 1.5 billion. Okay, sell the property. Proceed were considered to be equal to the fair value of the property. 30th June X5. Okay, so parent sold property to associate at its fair value. Okay. Articat had included the proceed in the group revenue. Proceed in the group revenue? Sale of property, proceed with revenue? No. Property should be recognized instead of revenue. Number one. So this is an error. Carrying amount of the property was 1.6 billion. Carrying amount means in the books of Findler, the value was 1.6 billion. So if with individual accounts or with the group accounts as parent, they have sold the property, the carrying amount 1.6, and they have sold with the fair value 1.5. First, they need to make adjustment of impairment. 1.6 should be reduced to 1.5. That's impairment. So there is something missing with respect to the impairment. The property which has not been recognized was used for admin purpose. It's not possible. Property should be recognized, so revenue should be debited, property should be credited. So these are the things to adjust here. So during the reading of the matter, not only consider the part A of the matter, or not ignoring the pre-populated, also consider the pre-populated matter. Okay, we can move with the part A as well, explain and calculate the disposal of shares and all these things, but you can work out with the pre-populated sheet as well and save your time. So where to start? Yes, we can start the number one thing, disposal proceed. Very simple. Very simple. What disposal proceed? Very categorically mentioned, Articat has included the entire proceed with investment income in consolidated statement of P&L. It's not possible. So need to adjust the income statement. So it's very simple. Investment income includes the 5 million proceed. 5 million? How 5 million? 500,000 shares multiplied by $10 each. So 500,000 multiplied by 10, that's equal to $5 million. That's a point. Is equal to 500,000 multiplied by 10. That's 5 million. Number one. Now, quickly, another one. Very simple. Goodwill impairment error. Goodwill impairment error. Very simple adjustment. Goodwill impairment. 20. Goodwill impairment. The reversal of impairment. That is the point 1020,000 into 25%. 1020,000 into 25%. So admin cost is minus. Listen carefully. Admin cost is minus. The company by mistakenly incorporated the reversal of impairment as a gain. P&L credit reversal of impairment as a gain with admin expense. So where admin expense become reduced, because if you incorporate the income with the admin expense become reduced. Now we have to reverse back that particular income. That means the expense should be increased. That's why minus 6,116,000 and minus 255,000. Minus, that should be plus. That's a point. Very important. You need to very focus that about what should be the minus and plus point. That's important, huh? Another point. Revenue error. What revenue error? Instead of de-recognizing the property, they have included with the group revenue. That is wrong. Absolutely wrong. So revenue should be credited. Sir, property should also be debited. But the property, it's not a matter with the consolidated income statement, huh? And that is the adjustment at year end. So not to worry about the depreciation as well, because the date is 30th June X5. 1,500,000 revenue error. Very simple. Now the next point. That is about disposal gain. Now come on. Very simple. Gain on disposal. You need to check your answer as well. Huh? If you definitely you have done the question. Proceeds, disposal, control loss. Huh? Proceeds 5 million. It's very simple. That's 5 million multiplied 500,000 to 10. Fair value of remaining investment 400,000 remaining investment into 10. So that means total position after disposal is 9 million. Carrying amount of net asset as disposal, it's given. Carrying amount of net asset as at disposal, that's equals to 9048. That's given. Carrying amount of goodwill as disposal, that's given. 1,020,000. Sirs, had been impaired by 25% in the year end 30th June X4. Okay. So This is the value 1020,000 into 0.75. Sir, this impairment it's about last year. No worries. We are disposing the subsidy either current year or last year. So that's very simple. 1020,000 into 0.75. Less carrying amount of NCI's disposal. That's you need to work out. Calculate NCI at disposal. Yes, that value is given. Value is given about NCI fair value NCI at acquisition. At acquisition, the value 870,000. Yes, given 870. But share and post acquisition reserve. How to calculate share and post acquisition reserve? At acquisition, the identifiable net assets 7950 at acquisition. At disposal, the value 9048,000 into 10%. At disposal, with Findler 90% shared by the parent, remaining 10% NCI. So fair value NCI at acquisition, post acquisition reserves with 10%, less goodwill sharing and impairment. Goodwill impairment sharing. 1020,000 total goodwill, 25% impaired into 10% NCI share into 10%. 1020,000 goodwill value multiplied by 25% impaired NCI share 10%. So this is NCI value. So 9048 plus 765 minus 954.3, that's equals to 8858,700. So difference will be the gain. That is simple. That's very simple. That's the working number 2 and working number 3. That's a point. So now this is what about the gain on disposal. The gain on disposal. This is a gain on disposal. Gain on disposal. This is a separate line item. So we need to mention with the separate line item. Separate line item. That's a point. As a separate line item. Yes. That's a point. Now, so this is called simultaneous approach. That's a point. Something about sale of property, you know? And here you required some adjustment. That's an impairment loss. But before that, we need to incorporate one more thing. That is associate profit. Share and associate profit. Come on. Because we have already decided that first 9 months and last 3 months. First 9 months, that's consolidation. Last 3 months, that's associate accounting. Associate accounting, that means profit sharing. Profit sharing. What profit? Current year profit is 504,000. Multiply by 3/12. Last 3 months. Into 40%. 40% now become associate. That's simple. We have decided associate. That's a profit. Like subsidy, here also required fair value adjustment. It's mentioned that plant owned by Findler on 31st March X5, 20,000 above the carrying amount. Remaining life 2 years. So here the calculation that is about 20,000 divided by 2 years per year depreciation, multiply by 3 over 12, only 3 months excessive depreciation, and here 0.4. That's the value of the 1000. 50,400, and as any of the adjustment related to the associate profit, it adjusts with the any of the adjustment related to the associate must be adjusted with the associate profit. So 50,000 minus 1,000, that's equals to 49,400. That's a point. So now this is the associate point. Now come on. This is what about the associate point. Associate. So you need to mention the name. Separate line item. Gain on disposal. Gain on disposal. Okay. Now, the very last point, very last point, that is about the impairment loss. Parents sold property to associate. Okay, that's good. With a fair value, at its fair value. But with respect to the carrying amount, the carrying amount is 1.6 million and the fair value 1.5 million. So this is about the impairment loss of 1.6 minus 1.5 is equal to 0.1, and that's related to parent only because it's an impairment loss of the parent. And we need to make adjustment here. Yes, 100,000 adjustment. From where we need to make adjustment? Impairment. Sir, impairment we need to adjust with the admin expense. Yes, goodwill impairment, other than associate, subsidy related goodwill impairment, parent related impairment, all the matters incorporated with the admin expense. So in fact, we have covered almost all the things of the part B. Instead, in fact, we covered all the things. So now, this all adjustment that we have done it, that's good. Now the point is, redrafted. This is the figure of redrafted. Redrafted income statement. Redrafted income statement. Students, carefully listen. Redrafted, how to calculate? Just sum up all the things. Just sum up all the things. Nothing else. Just sum up all the things and redraft. But very importantly, these are the marks of this 14 marks. Now you need to listen carefully. These are the total 14 marks. or 15, whatever. Listen carefully. 2 marks about what? Now listen carefully. Yes, 2 marks for what? For revenue, there are two adjustments. So revenue, two adjustments, that's intragroup sales and revenue error. That belongs to 2 marks. Then again 2 marks about the cost of sales. Cost of sales also have 2 mark, two adjustment. So 1 adjustment for each mark. Admin expense having 2 adjustments. One about goodwill impairment error reversal and another property impairments. That's a missing figure. Okay. Then investment income, 1 mark. Very good. Only 1 adjustment. Then gain on disposal, 5 marks. 5 marks for what reason, sir? Because you have done a detailed working about gain and loss, including NCI at disposal as well. Okay. Share and associate, 3 marks. Sir, for what reason? The reason is the calculation of the associate working. Okay. So that is about the marking scheme. That's good. So if you have done 50% of your adjustment right, 50% wrong, you will be able to get 50% marks. Don't worry. Is this clear? I hope it's clear. Now another point. Listen carefully. Another very important thing. Although I have demonstrated this column, redrafted, but are you observing any marks for this redraft income statement for this working? No marks. Do remember, during examination hall, your marks belongs to your marks belongs to only these columns, not the redrafted balance sheet, cash flows, or income statement. 0 marks. Don't waste your time for this column. Don't waste your time for this column. Just to pick the figure and plus minus all the things, and then you will feel you will be happy about that. Okay, this is what about 7790 is the for example, one moment. One moment. The revised, sorry, the profit 7790 for the wrong profit. Now the revised profit is about 1119,700. No need to make for this column. Just make adjustment and that's all. Sir, here question particularly mentioned that. Sorry. Here question particularly mentioned that using pre-populated response option and exhibit 1 and 2 revise the draft consolidated P&L. Even mentioned that revised draft consolidated P&L. Examiner is expecting to make some and show the adjustments only, not to redraft the balance sheet income statement. It's a point I've taken from examiner report, and it's absolutely right. That is the point. So this is the point that we have covered accordingly. That's about the draft. That is about the pre-populated P&L adjustments. Now the next part. I hope that you have put a best effort about the next part. That's part A. Using Exhibit 1, explain and calculate accounting treatment in the consolidated financial statement, disposal in shares and Thirdle. So disposal in shares and Thirdle, it's about no control lost. And you know that about no control lost, the disposal adjustment not affect to the P&L. That's why we have completed our P&L, but ignoring the disposal of shares in Thirdle, because no impact on the consolidated income statement about the no control loss. That's a point. Number 2, using Exhibit 2, explain without calculation. Why without calculation? Because calculation is already done with the pre-populated. Explain reversal of impairment of goodwill, disposal of shares in Findler, and sale of property by Articat company to Findler company. These 3 things need to consider. Now it's about the part A, how to attempt part A. Now come on. So let's start discussion with part A1. With part A1. Very focused. Explain with calculation about the disposal of shares in Thirdle. Disposal of shares in Thirdle, where no control lost. Where having no control lost. Now come on. I hope that you people have already done the things. Students, a very important point, as I have already mentioned you multiple times before, whenever you are starting anything, either the calculation part, either the theory part, you don't ignore the brainstorming, especially for the theoretical part. You need to identify the key points. So first of all, make it clear, whatever you are writing, that's no control lost. Okay, number 1. Number 2, if there is no control loss, then we need to continue the consolidation. That's with 100% consolidation. Although the NCI sharing will change accordingly, but here the question is not about the NCI. No adjustment made with respect to the consolidation. Here the case that they have not made any consolidation adjustment. So now the point is that for brainstorming, that we need to identify, we need to think that what important points that we need to work out accordingly. This is 11 marks question. The examiner categorically mentioned with the marking scheme 5 marks belongs to disposal of shares. 5 marks belongs to disposal of shares. This is the case, 5 marks. For 5 marks, you will start with a very easy point. And the easy point is about the justification of the no control lost. Simple. Here, the sharing of percentage change from 80 to 70. For that reason, this is a disposal, but no control lost. So the first statement, always the drafting, it's very much basic and very much simple. And you will be able to get easy 1 marks. So basic start with the case reference and very basic. Then you need to involve with more details, with more complications. That's it. Just what adjustment required between the controlling interest and non-controlling interest. That means owner's equity. Of course, if you dispose your 10% of the sharing, so your controlling interest will reduce, and the NCI that's non-controlling interest will become increased. So you have to mention the things with the 2 marks. So 1 plus 2 marks is about the knowledge, and then of course you need to justify the things with the case. That's application. And you will get easily the 5 marks. Don't worry, you will be happy with this question because it's not very much difficult. So let's make a quick discussion about that. How will you write that? Number 1, basics, very basic case reference. The sale of the artifact company reduced the ownership from 80 to 70 since no control loss. So Articat, the company, the parent, correctly included 100% income expense of the hurdle for the year and consolidated P&L. It's mentioned in the case, it's very particularly mentioned that 100% of the revenue they have already incorporated. And they are absolutely correct. Students, do remember, SBR is a professional exams of ACCA strategic professional where you just throw the knowledge. It's not good enough to get the marks. If you just throw the knowledge, you will get very selective marks. In fact, not able to pass the exam. So whenever you're writing the answer, you have to mention the case reference. For example, the case about reference of the parent name, reference of the case. For example, they've correctly included the income and expenses. That's a point. So that's called application. So first thing is very simple. Now the second point, the proceed received. Now the second point is about the knowledge about that, how to account for that. Whatever the proceed received should not be credited to investment. Instead, reduction in the ownership, that's reduction in the controlling interest, have been treated as equity transaction. So NCI debit, cost of investment credit, the difference to the equity. The carrying amount of NCI is adjusted to change the interest in hurdle since NCI acquisition initial proposition with a proportionate method. So no goodwill attributable to the NCI. So it's a basic reference. Number 1, what happened, no control loss, how to account for the knowledge. Now the case, you have received 4,65,000. That's a proceed of 465,000. And NCI at disposal date, at disposal 4.8 billion. At disposal 4.8 billion. So that means NCI will increase. That's NCI credited 480,000. Proceed debited, bank debited 465,000. The difference will be on credit 15,000. If you mention this statement, you don't need to show the entry. This is just for your reference. Because if you mention the entry, you are actually wasting your time, wasting your energy. Because these similar thing you have mentioned with the statement. Until unless examiner particularly mention about to show the journal entry, you don't need to mention any transaction. Okay. The profit and loss attributed to NCI and consolidated P&L must be time proportion to reflect the change in ownership of the on 1st October X5. Sir, why you mention the NCI? Because in this question, NCI, it's not the discussion point for the case. Sometime we have to mention some statements to show the completeness of the answer. I don't think so that if someone lose that if someone not mention this particular statement, they will not be able to lose any marks. Don't worry about that. But for my opinion is that to complete your statement, one line, if you add that, that's not more than 4 to 5 seconds. So this is what about the answer related to part A1. First, good reading, good planning, include brainstorming, and then answer. Sir, is it necessary to make headings? No, this headings just for you people for the simplification. My answer is in a manner you just compare your answer and mark your self-attempt answer as well, and able to get, and you will be able to get to know that either uh, uh, you become pass or fail, or you got the distinction with this particular question as well. Now next point and the last, explain without calculation. Without calculation. The accounting treatment in the consolidated financial statement about the reversal of impairment of goodwill. Reversal of impairment of goodwill. The reversal of impairment goodwill, you have done it with the pre-populated. The disposal of shares in Findler and the sale of property by Articat company to Findler. One by one. Reversal of impairment. That's, you remember the issue about the reversal of impairment, because the justification is that because we have sold the inventory more than the cost, that's why we need to reverse the impairment. So that's first thing. So reversal of impairment. First thing is about brainstorming. You need to think about that. Think. What the points? You need to think about that. Number one, this is out of 11, this is something 11, 3 marks. First of all, start very easily. Reversal of goodwill impairment. Quick reference of IS 38 with your own wordings. Then mention this is incorrect treatment and the correction of error. That's simple, 3 marks. Very simple. IS 38 explicitly prohibits the recognition of internally generated goodwill, since goodwill is non-identifiable resource controlled by entity which can be reliably measured. Number one. Number two, it is incorrect to reverse the impairment of goodwill of Findler, and this is because the reversal, that's the error they have made. You need to identify, you need to mention that. That's application as well. This is because reversal would represent increase in internally generated goodwill rather than reversal of impairment loss for acquired goodwill. IS 38 specifically denied, not possible for the accounting to account for reversal of impairment of goodwill. So the reversal of impairment to 55,000 added back to the admin expense that we have already done with the calculation. Now next point, the disposal of shares, in Findler. Whatever the calculation we have made, we need to explain here. 5 marks. Here examiner mentioned the 5 marks. And it's very simple, students. It's very simple. It's a very simple point. Just a happy point for you. Because students, lot of times, the student invested more time about the group accounts related to disposal issues. You just explain with your own wording. First, start with the easy point. You have to justify this is the case of control loss. You need to connect with the case, 1 mark. Then you need to explain the accounting treatment of the control loss. Whatever the calculation we make, the calculations, these are the calculations. Gain on loan disposal. Just explain this format, nothing else. And yes, of course, you don't need to ignore the disposal at the mid of the year. That's 3 months before the year end. But after disposal, you have to mention, or you have to write the answer about the equity accounting as well. That's a point. So this is very simple. That's number one, justification. That's a justification about the point. Number two, about disposal. This is disposal. And this is associate case. That is associate significant interest. Very simple. You just read it accordingly and compare your answer. Last, about the thing, the sale of property by Articat company. Articat, parent to associate, the property matter. The sale of property matter. Number one, the quick brainstorming. The key points. This is a downstream transaction. Downstream means that is a transaction parent to associate. This is the terminology used by the accounting standard. Downstream. Parent to subsidiary or parent to associate, that downstream. Associate or subsidiary to parent, that is upstream. So if you don't mention this terminology, don't worry about it. And this transaction is a loss transaction. Number one, they have made an error. We have already adjusted that. They have incorporated with the property. So you have to mention that debit or reverse the revenue matter. Reverse this transaction with the revenue. Revenue should increase and property should decrease. One mark just for the mention that this is a transaction parent to associate, and any of the profitability or the loss, parent must have to report with the particular sharing. Okay, one mark that's related to adjustment of error, and last marks is about the impairment loss. That's we have already taken. The parent must have to make an impairment loss because the carrying of, although they have sold at fair value, but the fair value is fair value is higher than the the fair value, the consideration received is less than the carrying amount received. That's why the impairment loss. That's the point. So you just need to read this solution. Very simple. The sale of property by Articat company is a downstream transaction with its associates, Friendler. Losses on downstream transaction with an associate usually recognized in consolidated financial statement only to the extent unrelated investor, that is interest in associate. Interest in associate. The proceed of 1.5 million should be removed from revenue, as the property should have been derecognized instead. However, the proceed receives 1.5 million are shared to fair value of property sold, but the carrying amount of 1.6 million, this means 0.1 is the evidence of impairment at the point of sale. So the parent should recognize loss of 0.1 million in full in profit and loss account. It's very simple. So this is what about a complete debriefing about this question. That is Articat company. I hope that you people have identified the gap, what you people have done and what should be the answer. Definitely the document and the Excel sheet will be available to you. Don't worry about that. If you have any question, you can ask me on the WhatsApp group, and do practice the questions, whatever the advice I have made with you, and try to practice the question in a manner that you become very much efficient to complete your group accounts question within 45 minutes. And may Allah, God willing, you will do that. Thank you. Take care a lot. Assalamu alaikum.